welcome home. This is Leo Kane with Beryl Engineering and Inspection, bringing you the exciting news. We have Sarah Cricky on the line.
Good morning, guys.
Excellent. Welcome, Sarah. So I hear you got the juicy data for us. We're approaching this from the real estate broker transaction area, but you've got something from us on the other side of the equation. So what are you seeing in the marketplace right now?
So we have some new Hometown Heroes money. The publication for funds available and interest rates comes out about 10 o'clock in the morning every day. But as of yesterday, we have $31.5 million in Hometown Heroes funds, which are available. Interest rates are typically lower than retail at no cost, so it's a great opportunity. The funds are not going to last long. But anyone that can take advantage of that, it's a fabulous deal, and it's especially fabulous for a VA buyer.
So did this come about through the special session that happened Monday and Tuesday of this week, or is this money that was just kind of trickling back from the session in July?
For a while, there were trickle-back funds. In other words, what was happening was, all of the loan officers that had access to this program were reserving funds for their buyers, but that doesn't mean that every buyer could actually be approved and closed. So when those reservations were canceled, that money went back into the fund. And so we were basically checking in on every Tuesday, for example, for an update with respect to available funds. And sometimes it would be $1 million, $1.5 million, $200,000. Florida Housing itself funded Hometown Heroes again with its own money. It started with $36 million, and now we're down to 31.5. Pending, what they open with today.
So I got a question for you. If I'm buying a house, let's say the house is $500,000. I'm putting 20% down, so that's $400,000. Is that whole $400,000 coming from Hometown Heroes, or is this a portion of it? So I'm just trying to get a flavor for how much $31 million actually is.
So did you say you were buying it for $500,000?
Let's say buying a $500,000 home with a 20% down. So it's $400,000 on the note.
Let's say you were going conventional and you were buying a $500,000 house with 20% down. That would be a $400,000 mortgage. You receive 5% of that $400,000 loan amount in the form of down payment assistance. So that would be $20,000. That is $20,000 coming out of the $31.5 million worth of funds that we would reserve on your behalf. That would be a silent, they call it silent second, which would be a lien on the property with no payment due at a 0% interest rate. And it just sits there. You're basically using that money for free. So maybe you have your 20% down payment, but you need some closing cost assistance. We can use those funds for down payment, for closing costs, prepaid, things like that. That 0% second lien would just sit on the property, and it would not have to be repaid unless you refinance, sold, or cease to own or occupy the property.
So if I'm doing the raw math correctly, using the median price, that's actually used a number that was above the median price, but this can do about this $31 million can do about 1,600 homes in that scenario then.
Yeah, I mean, and that price points vary. You know what I'm saying? There are other programs out there. If we can't, for example, use Hometown Heroes where we can reserve bond funds of $1,000 and things like that. That doesn't have a cap. It's not running out of money, in other words. But yeah, we definitely are trying to capitalize on the Hometown Heroes that is available. When it ran out of funds and it replenished itself in July with another $100 million, that $100 million was gone in less than 30 days because they listed what they required the occupation to as far as for a job. The new guidelines are that qualify as long as you're working for brick and mortar based company in the state of Florida and 35 hours a week. So it's kind of open to everyone. If I had to take a guess, I would say that $31.5 million, based on how fast I've seen it go, is probably going to carry out about another 2 to 3 weeks.
Oh, so basically it's jump on it now or you're not going to see it at all.
Correct.
Yeah, so I was thinking 1,600 homes in the whole state of Florida. I mean, we're normally seeing pendings in the 700 to 800 just in the Tampa region on a weekly basis. So I'm like 1,600 homes, taking into account the Miami market, the Broward market. That sounds like a week.
Sure. Not everyone's going to qualify. There are income caps. buyer, then you're looking at the fact that you have to be a first-time home buyer, which means that you have to have owned a home in 3 years. I mean, there are criteria where, there's criteria out there where some folks just aren't going to meet that criteria. Veterans capitalize on this program, VA buyers, because they're exempt from a lot of the rules that pertain to this program. So, for example, if you're a VA buyer, you're exempt from the first-time home buyer rule. It doesn't matter if you've owned a home. Same if you're active duty. The program requires home buyer education. If you're an active duty or a vet, you're exempt from that. In fact, we're doing a loan right now for someone that currently owns a primary, intends to retain it, and is buying a new primary. And because they are VA, they are exempt, and they can still capitalize on that hometown heroes money.
Awesome. Speaking of first-time home buyers, it's still set up in a way where you're considered a first-time home buyer as long as you haven't bought in the last 2 years, or did they change that rule?
3 years.
3 years. So that's 3 years. So I can be a repeat first-time home buyer.
Yes. Yeah, you can be a repeat first-time home buyer if you sold your house 3 years ago and you've been renting or living with family for the last 3 years. Correct.
Oh, so you can't use first-time home buyer if you still own your home within the last 3 years.
Correct.
Oh.
The exception to that is that, for example, you're dealing with a divorce situation, and the departing spouse is now buying their first-time primary.
Ah. All these rules. I'm glad we have you on the line to be able to clarify these rules with first-time home buyer, hometown heroes. If you need to get a hold of Sarah, make sure you hit us up.
Well, a really cool example with regards to the VA buyer, and I just closed a scenario like this a week ago, is let's say that you've used your VA in the past, and let's say that you don't have any percentage of disablement, so you're required to use funding fees. Subsequent use funding fees for VA are 3.6%, which is cheap, and it's financed in the loan. So if I were, for example, using my VA for the second time, and I had no exemption in terms of my entitlement and funding fee, and I was buying a home for $450,000, my 3.6% funding fee would be $16,200. That would be financed on top of my $450,000. Hometown Heroes will give 6%. So let's say that I'm prepared with my closing costs, I have all of that money set aside, or if the seller agrees to give a contribution. I can take that 5% Hometown Heroes money, apply it down to my loan, and at 95% loan to value, that 5% down payment coming from Hometown Heroes, I just cut my funding fee down to 1.5%, which instead of $16,200 is $6,412. So using those funds, instead of just going zero down VA, financing the whole funding fee on what would be a $466,200 loan amount, I'm now using Hometown Heroes money down. I'm cutting my funding fee by 2.1%, and I'm actually saving in my first mortgage $231.91 a month, just based on what rates were for Hometown Heroes yesterday.
And you're not financing. Whoops.
So there's all kinds of creative ways that we can spend this money, and it's, like I said, it's especially beneficial to a VA buyer who doesn't have a down payment. Depending on their funding fee or their exemption funding fee, they may not need the entire amount in terms of the 5% for closing costs. We can spend all of that money. We can take any leftover money that's not covering their closing costs and just apply it toward their loan and reduce their first mortgage payment.
Yeah, it's especially with them not rolling in that huge funding fee, they're going to save interest on it too, because I think people forget when that gets tacked on, you're now paying interest on that.
Yeah, I have a client I closed last week. He didn't necessarily need the Hometown Heroes, but the interest rate came with no cost. He was exempt from paying sales tax at closing on his purchase, and he cut his funding fee by 2.1% just for using it as down payment, even though he had the option to go zero down. So it was a win-win situation. It's different for every borrower, but we definitely look at creative ways to use that money for their benefit.
Well, I'm just happy to see the veterans having a shot at the market now, because for so long, sellers were not taking any FHA or VA offers. I mean, unless you were Even conventional buyers had a hard time in the market at one point. It was like people were snapping up all the cash. Conventional at least had a chance, but the VA ones, man, they went on the back burner. So I'm really glad to see they finally have an opportunity now to re-enter this market. So our off-air number is 813-377-2775. If you'd like to get connected with Sarah, myself, Adam, Leo, or any of our guests, if you have an idea for a show, if there's something you want us to cover, call or text us. We always welcome your feedback. We welcome your ideas, and we're happy to bring on guests that you feel like would be a good match for our show. 813-377-2775. That's our off-air number, and you can call or text it anytime you like. 813-377-2775. What are you laughing about, Adam?
Leo just tapping this like you've forgotten it over the past 10 years.
Hey, I read it off the reflection now. That's how I keep the numbers straight.
I'm sure you had it memorized day 2. So.
I don't know. That's 2 and that 3 always throw me off.
All right, 813-377-2775. When we come back, we're going to talk about some insurance stuff and some condo stuff. Back in a minute.
And welcome home. This is Tampa Home Talk. I'm Adam Talley with Talley Insurance, and for once in what feels like a very long time, providing some positive insurance news to the world today.
Really? Because I have my pitchfork and my bonfire torch ready to go.
Yeah, I know. Well, you know, it's just more opportunities for you to sue these people, I'm guessing, but or be that expert witness,
or defend them.
Very true. Very true. You don't pick sides. You are very neutral. But there are new carriers coming into the state, which is always a benefit to everyone.
Are they like old carriers come back, or are they just brand new that they don't know what they're walking into?
So,
well, can I mention something real quick?
Sure.
Because I had pulled this up and it'll lead into what you're going to talk about.
Sure.
But I was looking at, because this has been a whole thing, right? The people that basically go bareback, or they go bare, and they basically have no insurance at all, meaning they paid their home off and they have the ability to self-insure, right, with zero insurance. 15 to 20% of homeowners right now have no insurance whatsoever because of the premiums.
Yeah, no. If I had the ability to do that, that's probably the way I would do it, because my insurance premium's $8,000 a year. If I run the gamble, I'm probably better off not having insurance.
Yeah, I mean it depends, right? And claims can add up quick. It really only takes one to make it worth it. You know. Yeah,
but the problem with the one that makes it worth it, you've got a 2-year fight with an insurance company, and a lawyer's getting 35% of that.
Or more.
Hopefully not, right? Hopefully it doesn't take 2 years and it's something that just gets paid. But anyways, back to the positive news.
Yeah, because that's what we were bringing up. But
yeah,
I figured it made sense just to talk about this, because that's a big number.
It is, but not everybody can do that, right?
Correct.
You know, you have to own that home outright. And in my opinion, if that's the only house that you have, you also need to have big enough savings to rebuild. Right?
True.
Because it doesn't matter if you already own the home, but where are you going to live, and how much money do you have to live that way if something happens?
So
right?
Are we in this scenario because premiums have gotten so high, it's now worth the risk for certain new carriers that are unfamiliar with Florida? Is that what's happened here?
No, I think what you're seeing is finally, after what we had, probably was it 2 or 3 years ago, they started passing the AOB laws. That was pretty big.
That was huge. They got rid of the door knocking roofers.
Correct. And it's the small percentage that ruin it for everybody else, right? Most people are on the up and up and just trying to do right. But they got rid of the AOB. Now that's had 2 or 3 cycles of coming through, so we know that's not an issue anymore. And then all the stuff they passed in December has made it more enticing to come back.
And what he's talking about is now how legal fees are paid by prevailing parties, and the percentage of legal fees that would go to the attorneys versus the homeowner. That really took a hit to the first-party property world, where lawyers, it's like I said before, why file a claim when 65% of the money is going to an attorney? That has changed.
Correct. So a little bit of that, and then let's face it, we got pretty lucky this year. Didn't really have too many storms, although it takes years in the process of doing this. But that's helpful as far as a reinsurance is concerned, especially if you're a company that is in more than one state. You need that reinsurance kind of spread out throughout. So it's a good thing. Now, you did ask, kind of your original question was, are these brand spanking new, or are these spinoffs of other carriers? So it's a mix of both. So two of the ones are actually from the same carrier. It's just two different carriers. I know nobody can see my air quotes, but
No, we can. We're on the YouTube.
Okay,
we're
so
on
the
the
YouTube
Facebook.
and the Facebook can see.
Make sure you smash like and subscribe so you can see me tap on the back panel for the phone number, and you can see Adam's air quotes.
Fair enough. So, but essentially, you'll have one parent company that owns several different underwriting companies, right? So one of them is an Indiana-based company that is going to have two separate underwriting companies here. That's Orion 180 and Orion Select, or Select Orion 180, something like that. And then the other two that are newer would be Tail Row and Mainsail.
I've heard of Mainsail.
Weren't they in another state or something?
They might be. I couldn't find anything on them when I was looking at it, but and then I couldn't find the fifth unless they were talking about Loggerhead, which is another new one that came out earlier this year, which kind of took over some of the for those people out there that had a banker's homeowners policy. Okay. Loggerhead took over a majority of those as bankers got out of the homeowners market. And then similarly, there's some ASI, or as it's probably branded if you've been there long enough, Progressive homeowners non-renewals that are coming through, and Loggerhead's going to take over some of those as well.
I like the name Loggerhead. Reminds me of the Turtles.
Right, yeah. It's certainly a turtle
Yes.
thing. So anyways, the good news is for consumers is it's more competition is going to either level the price out or help suppress it a little bit. Right. Now, the thing to be wary of, and I mean, you gotta kind of look at it from your own financial standpoint. But sometimes when these new carriers come in, they don't last very long. Right. So you gotta weigh the risks of switching depending on where you're at from an underwriting standpoint. But it's a good opportunity to hopefully keep rates from this ever climbing thing that they're on right now.
Well, eventually the other companies will have to get competitive, so they'll.
Well, if you want market share, you can just lower it and lower your underwriting standards. But what you're going to do is set yourself up for failure because now you're taking on risks. It's adverse selection.
I mean, the other thing you have to think about is when you have a rate table for your insurance company, you have to file that. It's public knowledge. It's very easy to do collusion. And if an existing carrier is coming back into the state with two subsidiaries, they're already working on what's called an oligarchy economics standpoint. And an oligarchy is where you have a select few vendors who can get together to control market pricing. So if you have a parent company with two subs, you now have three companies that basically can set their own pricing. So it's not really going to be a cost reduction when you take into account that aspect of economics.
Fair enough. Anyways,
but speaking of which,
I got nothing.
I got nothing on that. If they want to sell policies, they'll lower their price. If they don't want to sell anything, they'll keep it high. I mean, that's how it's going to work because other carriers are going to have the same interest to, if they want to bring on market share, to do it, right? Which you're seeing the opposite of that right now on the auto insurance side, right? Nobody on auto insurance really wants to take on any new business. They're pricing it like that. They're putting their underwriting standards like that. I would say out of the 12 carriers I have, when we go to do requotes and stuff, I'm getting 2 to 3 quotes back.
Why do they not want to do auto?
The highway shut down today.
Yeah, the highway shut down.
That's a good reason.
I mean, they're losing money, right? I mean, it's like anything else. If you're losing money, you got to step back and see how you're doing things. A lot of stuff that I'm seeing is actually kind of trending towards. They're trying to push people more towards those middle coverage limits, 25, 50, 50, 100. Because what they're seeing is you get these attorneys, and
limits
if you
of
just
coverage.
pay policy limits, they're not going to really pursue much further past that. So it's much easier to do that with a 25, 50 policy than a 250, 500 policy.
Which actually that makes sense because if you follow the trend of these attorneys, a lot of them started off in sinkholes back in the early 2000s. Mm-hmm. They then migrated into personal injury, which is auto. Mm-hmm. They migrated then into roofs, which is first-party property. and now they're migrating back into personal injury. And I'm just watching these same firms. You can watch them rebrand themselves into those arenas. So as first-party property, which is your hurricane claims, as that starts to dry up from Ian, they're moving back into personal injury. Right. Which is going to impact the auto industry. So it makes actually a lot of sense.
Like, I guarantee you, most of the people listening to the show right now are paying way more for auto insurance than they're paying for home insurance, regardless of their home insurance increases.
The auto insurance
I challenge you on that one with my 100-year-old house.
Yeah, right.
I said most. Okay, I didn't say all.
You're always the exception, Leo.
Yeah.
You know, but it's tough, right? So auto insurance, what I'm telling people is be patient. I think once we get Q1, Q2, these other carriers, the thing is you might not be able to be as transient, but if other carriers are starting to open back up again, you'll probably see the rates kind of hopefully
We need more
level
carriers. I mean, the bottom line is we need more carriers.
You need options. Well, but the thing that it comes down to is it doesn't matter how many carriers are in the state. It's going to come down to what their underwriting appetite is, right? You know, if we have 20 carriers, but all of them are only trying to get houses that are 5 years old or newer, that's great if you're in a brand new house, but that's not changing the 95% of people that are going to have to be with Citizens because they don't want to policy.
Is that the case with some of the new ones coming in, or do you know?
I don't know yet. I think what's going to happen with a lot of the new ones is they'll start out as takeout carriers with Citizens. So all this depopulation stuff that we've been talking about and we've been seeing, you know, they'll start out like that to kind of gain, you know, a foothold that way, and then they'll open back up. I don't anticipate them wanting to take on, you know, new writing business immediately. And if they do, it'll probably be through a few select agencies and or networks of agencies to where they can have a more scalable, entry.
We're going to need a couple quiet storm seasons to get our
Well, I mean, and that's
carriers
what
back.
happened the last time. So if you think, like, the last time Citizens was really blown up, right? It was right after, 03, 04, 05, or 04, 05, 06, whenever we had all those storms crisscross the
Oh,
state.
yeah. That was like
right?
Charlie.
That was 04 to 06.
Okay, so everybody backed out, right? And you were kind of where we are right now.
But that was way worse because it was like back to back to back to back.
Well, correct, but you had a similar situation in the insurance market, right? And you had a lot of carriers that were going out. And a lot of people had to be with Citizens because they didn't qualify for anybody else. And then what happened is we had about 10 years of no storms. So that's when we had all these people coming into the marketplace. You had people pricing it like, I mean, you remember when we first started doing the radio show, you'd be selling a 1975 house and we'd be getting a policy for $1,100, right? Just because it had a new roof. Like things like that.
I
Just
miss those
days.
days.
Because we had 10 years of no storms. So people will come in. So if the trend from this year continues, we're probably looking at it's cyclical. Now, I don't think it's going to come down to where it was prior, but any sort of decrease would be a nice reprieve. But it's not just the frequency of storms; it's where it hits. Right, Adelia could
Flooded
not,
the state.
I feel bad for everybody that got hit, but it could not have picked a better path as far as population is concerned. Right? I mean, and most of the damage was flooding, which is FEMA anyways, which doesn't affect your homeowners rates. So, that's really great. If we have a season where, hey, we still only have one storm, but it hits Miami and comes across Orlando, or the opposite way, Tampa across to Orlando that way, I mean, then that's a real problem, even if it's just one tropical storm that could cause
some of these
chaos.
storms, they've been really strong, and they've made their way all the way up the Northeast.
Right.
And hit even as high as New York. I mean, what was that one storm? Do you remember, Leo? It hit New York and I think
Superstorm
Maine.
Sandy.
Yay,
Yes.
look at me.
But there was
Click on the
another
trigger.
one besides Sandy. That
Sandy
made
was
it
the big one.
Sandy was the big one.
That was the big one.
Anyways, text 813-377-2775 if you have questions on insurance, any of our other topics. 813-377-2775.
I had to manually pull these condo
Well,
numbers to
but I do
separate
want to
them.
talk about the $170 million grant program that was approved on Monday and Tuesday. So we have a lot to cover in the last segment.
Yeah.
This is all new. Speaking of new, I recently started exercising again with lunges.
Oh,
Yeah.
look at you.
It was a big step forward.
I used to do that on ice skates.
I'm
Lunges.
going to go home. This is
All right. Well, we're going to talk about condos and the grant program when we come back. There's some good stuff in there. Hopefully that keeps our market moving a little. This is Tampa Home Talk. We'll be back. Stick around.
Welcome home. This is Leo Kane with Beryl Engineering and Inspection, bringing you breaking news, completely broken news.
Is that the way it's going down?
The state of Florida is working. That's broken news for you. So, as you all know, we're involved in the MySafe.
Hey, we maintain a good budget. I'll take that.
Yeah. So, as you know, we're involved in the MySafe Florida Home Program as one of the 3 entities that can help you get inspections to qualify for the grant program.
Leo, I thought there was 2. Is there 3?
There's 3.
Was there another one added?
No, it's just 3.
Okay.
And so basically what this grant program does is allows you to spend $5,000 on home improvements, roofs and windows, to basically get $10,000 from the state. And we have done about 15,000 inspections for the state of Florida this year as part of, I think, a combined 60,000 inspections across the whole state. And
Can I ask you a question before you keep going? Or no?
yeah, you can.
Well, so you said you spend 5,000, they give you 10?
Yeah, you spend 5, they give you 10. It has to be on things that, like when you get a wind mitigation form, we look at the roof, we look at the type of windows you have, we look at how old the roof is, if you have what kind of underlayment. We look at those components, and then upgrading those components is what makes you eligible for the funding.
How and when do you get the money?
It's a pay-to-play grant, so you have to spend the money first, and then we have to inspect to see the work was done, and then you get the grant money back.
So they give it to you in a check, or it's in your tax return, or what?
No, believe it's that part I don't know. I think it's a check. It's not a tax return thing. It is
Okay.
a state of Florida thing.
That's awesome.
Yeah. So basically you apply for the grant, we go out there, we do a wind mitigation inspection, and the report tells you what you're eligible for as far as upgrades for the funding. You work through the grant manager, you get approved, you do the work, we come back out, we inspect the work, you get another wind mitigation inspection. What's also neat about this program, if you just want a wind mitigation inspection for free, and you're willing to wait, because it's not instant like calling a home inspection company, you can get free wind mitigation inspections through this program too.
That's good.
And they just added $170 million. It started off as $110 million, and they just added $170 million this week in a special session. Since this program is going so well and was so popular, they had a special session when the money ran out to reinfuse it.
And so what is it going towards? Like, what items can you typically replace? It's
Doors,
the roof?
windows, and roof.
That's the only 3?
Pretty much anything on a wind mitigation form that's
Okay.
going to give you more insurance discounts. How this started was it was supposed to only be usable if you got a true insurance discount, but then they broadened it because $15,000 isn't going to get you all your windows replaced.
Right.
Or $15,000 if you have anything other than a standard 3.2, 1,700 square foot roof, that's not going to even get you your roof.
So if I want new doors, right?
Yes.
If I want new front and back doors, I can just apply
You can apply.
and just say, hey.
Well, you're in a condo, right?
No. So if I want front and back doors, like a single family house, I can
Yes.
just have new front and back doors,
Yep.
and they'll reimburse me.
Yep.
Now, but I have to spend 5 before they'll pay me back?
Yeah, well, you have to spend 5 to get 10. So if you have
That's
a
a pretty
total of
good deal.
15 or more $1,000 in upgrades, you'll get 10,000 back.
So, but what if you only have $2,000 in upgrades? How does that work?
Then you would spend trick math. You would spend like
So,
$700.
so if I had $2,100 in repairs, I'd spend 7. They'd give me $1,400.
Well, you'd spend 21 and you get 14 back.
Gotcha. Okay. All right. We're on. They pay for 2/3,
They pay for 2/3,
regardless of the price.
as long as it's 15 or less.
Okay. All right. We're on the same page.
this is-
Sorry, I had a lot of questions.
You did, and this is an awesome program. It's been going on since November of last year, so we're approaching the 1-year mark. Make sure you go to MySafe Florida Home. Just Google that, go to the website, and apply for your grant. Next question, Adam.
Next question. Okay. So.
You may or may not get Beryl, and if you do, say, I hear you on the radio.
That'd be awesome.
Yes. Okay. So for the upgrades and stuff, can you upgrade to hurricane windows for the program, even if it's not a requirement for like where you live?
Oh,
Right?
yeah,
So like if
definitely.
you're in the intercoastal, you have to have hurricane windows, right? You don't get a choice. In most of Hillsborough County, that's not the case, right?
Yeah, where this originated from was to give homes new roofs or to give homes those window upgrades for that very particular thing. It's to
Right.
get you insurance discounts. So it doesn't matter where you live in the state. If you upgrade to all hurricane windows and all opening protections upgraded, you get a discount.
Right.
And it's
That-
mysafehomefl.com?
Yeah, MySafe Florida Home.
Oh, MySafe
And
Florida spelled
it
out.
is important to not get confused here as we're talking about the different windows and doors and doing this or doing that. to get the credit for insurance, right, which is different from what we just talked about. To get
Right.
the credit for insurance for opening protection, it is all or nothing.
Right.
Okay? Any opening to the house has to be hurricane rated. Can't just be windows. It has to be windows, doors, sliding door, that little,
Tiny window above
tiny
the-
window in the bathroom that's, really doesn't serve a purpose.
Or if you cut a hole in your wall for a doggy door in the side of a house, that has to have a shutter.
Wow.
We ran into that this week.
Wow.
That's new.
Yeah, well, it's all opening protection. So if you have a hole, it counts as a mini door, and if it doesn't have a shutter, that opening is not protected.
What is a doggy door going to bring in if there's a storm?
Well, you have to think. Okay, from
Well,
an
if you're from a
engineering-
pressure standpoint,
from an
you're trying
engineering
to
pressure
push
standpoint,
when it's all protected, it pushes the house down from a pressure standpoint. You'll have one little chink in it. You blow the
So
roof
I
off.
show you some pictures from like Hurricane
How'd I do
Ian.
for my
You did really
engineering?
good.
Okay,
I
look
should
at
show you
us.
some pictures, Katrina, of offset ridge vents on roofs after storm events. They're all crumpled and compressed in like a crushed up soda can. If you have one unopening protected window out of that whole side of the house, that works as a vent, and that starts to compress the whole house in.
So you're better off having none.
Yes,
than-
that is true. You're better off having none
Than one
all but
undone.
one.
Got it.
Yeah, it's amazing when you look at like
science.
we did a case study on this actually back in 2019 on sides of houses and how differential pressures happen if you only replace some of your windows and not all of them. And I was astounded when if you only have like all your windows but one replaced, it only takes a storm with 35 mile per hour sustained winds and 50 mile per hour gusts to cause structural damage to your house if it's wood framed.
Wow.
But if you had none of the windows, it takes a 50 mile per hour sustained wind and a 70 mile per hour gust to do the same thing.
That's odd.
Not really when you look at the science.
I mean, I believe you. I just.
Because imagine a funnel. You pour a lot in the top of the funnel and it all comes down the bottom. And if you pour a lot in at once, what's coming out the bottom of the funnel is really, really hard. But if you pour too much, nothing comes out the bottom and it comes and splashes back up at top. Same theory.
Sure.
Yeah.
By the way, the interstate's still closed at MLK northbound, and they're using that side street to get people to enter at Hillsborough Avenue.
Yeah, I'm just going to go to the office, which is further north. And speaking of this opening stuff, that reminds me, I used to sing in the shower, but I had to stop. When I got soap in my mouth, it turned into a soap opera.
Oh, God, goodness gracious.
That was cute. That was really cute. I don't know how you remember all these, but it was cute. All right. Whew.
That could have been me if I wasn't in a Jeep.
You got lucky. Like, you got
Could've
lucky
been calling
that you
in.
backed off.
Yeah.
And you'd be still sitting
Well,
there.
stay safe out there,
Yeah, I'm in
everybody.
a ducked Jeep, and ducked Jeep knows no curb.
All right, we
Attaboy.
we got listings that we didn't have time to go over. If you want information, 813-377-2775, and we'll get them over to you. Remember, love for you where you live, or we're going to fix it. Welcome home.
Love where you live.